Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the euro versus yen. It's been on a volatile ride of late, which tends to keep traders away from the currency pair as it moves up and down in very sharp moves. However, we are approaching a key resistance area, which I think you might be interested. So let's get started. First off, look at this volatility. We had a big sharp move. This is the hourly chart, by the way. So each of these dashed lines represent a single day of trading. You can see big sharp move to the downside on Friday. A big sharp move to the upside on yesterday's trade. Big sharp move to the downside and trading here today, and an equally sharp move to the upside and trading here today. So lots of volatility. What we can say, however, is that look at the highs right here at the high right here. We stalled against the 100 bar moving average on the 4-hour chart, also near the 200 day moving average. You can add both these levels right through here. So there is a ceiling on that pair. Look at this high right here. This high right here stalled right against the 200 bar moving average on the 4-hour chart and ahead of the 100-hour moving average right here. So that was another key technical level that at a lower level that put a ceiling on the pair. And now we look at this high right here, and we wonder, well, are we going to run into resistance in this area through here? This area is now defined by a cluster of moving averages that include the 100-day moving average at 163.62, the 100-hour moving average at 163.79, the 200-bar moving average on the 4-hour chart at 163.98, and the 200-hour moving average at 164.02. What traders can say is that while we see a pattern of selling against technical levels, and this is a technical area, a cluster of moving averages that could put a lid on the pair if the pattern continues with the sellers leaning against technical levels. So this is an area where you want to be, where you could be interested in trading for a short-term trade. Your risk is if the price starts to move back above the 200-hour moving average. If it does, then that's a change in this bias of lower highs against moving averages. So if we start to move above this level right here, get out. However, conversely, if the price were to find sellers within this area, you could see the price start to move back down again, breaking below this level right here, which was a double bottom or near a double bottom, going back to those dates near 0.6320. And what you're hoping is that the volatility increases and continues to stay in play, and we start to retrace all the way back down to our low prices that we saw perhaps here. And if you get really lucky, back down through here, or at least to the bottom of the trend line right through here. It's not out of the question, given the volatility that we're seeing in this currency pair over time. So that's a trade idea. That's the look at what you can do in a volatile situation. Find a little pattern that might exist. Lean against the high of that pattern. And if it works your way, hope for a quick move back the other way and a quick profit in your trade. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.